Hello everyone, welcome to the EURUSDJune15th2009 daily analysis for the Euro US dollar FX for Monday, June the 15th. Well, quite a sharp sell-off for the Euro today. Very large-bodied candle, a new first time frame downtrend. We have a lower high and a lower low, or actually it's a continuation of the first time frame downtrend. The previous candle had just made a lower low, so the downtrend continued then. So we continue that downtrend. But we have a large increase in the size of the body, which means that we have even more net bearish gain from the sellers on today's trading. So it's what you want to see if you're going short in a first time frame downtrend. Now, we identified the potential head and shoulders pattern last week. We identified that that was a possibility, and the market did trade down to there and traded down through the neckline, and the neckline has been broken. Here we have the left shoulder, the head, and the right shoulder, and the neckline is this line drawn through the two shoulders, and we had a close down below there. Now, what we need though is a very strong close down below the neckline. Whether this is a strong close is debatable. I think what we need to do is wait for the low of the current candle to be taken out. If that's taken out, then we can be sure that this first time frame downtrend will continue on its way. The target will be the distance from the top of the head to the neckline projected down from where the breakout came. So the target will be down around here, which will roughly coincide with this previous swing low support. So there is potential, if you're a short-term trader, for a good trade here to go short for potential support down around this area here. Now that's the only support area that we've got. From the Ichimoku indicators, we have the cloud down here, and that's the fair way down below where the support is. So the next support after the swing low there is the support at the cloud, which is roughly about 134. Now, if we look at our other Ichimoku indicators, we've now closed strongly below both of them. And if we look back at our price action here, the last time that we were trading below the Kijun Sen was quite some time ago, a couple of months ago. That means that there's been quite a change in the character of this market. We identified a change of character when we substantially traded down below the Tenkan Sen, the fast line. We only just rallied up above there into this very, very strong zone of resistance and sold off very significantly. That tends to suggest that the market will trade down quite a bit further, and we should be looking to this area for support. Now, looking at our Tenkan Sen, this indicator here, it's pointing down fairly sharply, which indicates that the market has some good, strong downside momentum. And if we look at the slope of the line going back all the way across through to here, this line, the Tenkan Sen, has not been pointing down at all since a couple of months ago. So quite a large change of character. So we should expect this market to sell off quite substantially down to this area of the swing low, and then at least to the area of where the cloud is. Now the good thing is, as the trading continues, if we don't reach down here very quickly, then the cloud is actually pointing up. So as we continue to trade closer and closer to here, the support area for the market will come higher and higher and higher, and we should see support around this level if the market does trade to there, so higher and higher and higher. But I think we will sell off fairly epically and reach this area before the market even trades near there. So fairly bearish day for the euro.